Artificial intelligence is a hot item in Wall Street today. With this video, we're going to look at 26 of the most highly recommended or most often recommended companies that are participating in artificial intelligence. We have a little bit of everything here, some really high profile, high large cap names. We also have some small cap names. I do want to point out this is going to be a high level video looking at these 26 most popular or most highly recommended AI stocks. Hello, everybody. This is Chuck Carnevale, co-founder of FastGraphs, the Fundamentals Analyzer software tool, aka Mr. Valuation. You know, artificial intelligence is really a hot commodity now. You know, it's all the rage and all the news. There are some stocks that have had amazing performance here recently that are, most known to be in artificial intelligence. Companies like massive companies like NVIDIA and Microsoft, for example. And what I'm going to do is I'm going to take a look at 26 of the most highly recommended. Some are relatively new, young companies. We've got, of course, some really established companies. We even have some dividend-paying companies here that might surprise you that are participating in AI. So I'm going to go through these, but I do want to tell you in advance, this is going to be a very high-level presentation. The idea is to give each of you a perspective on what these artificial intelligence, companies look like today from a standpoint of valuation. In other words, I'm going to try to help you answer the question. There might be a lot of really good companies here, but are they still good investments? And some of the best companies may be the worst investments. And there might be some of the more speculative companies that might be the better investments. So I'm going to take a high level look. I'm going to look at operating earnings very quickly. I'm going to look at operating cash flow because a lot of these companies, especially the younger ones, I think probably best deserve to be looked at from the standpoint of their cash flows. And then last but not least, I'm going to look at sales real quickly. But again, this is high level. I'm not going to get into a lot of detail. The idea here is to give you something to look at or some investment opportunities in artificial intelligence that you might want to go ahead and research for your own. So let's go ahead and get started. These are the 26 companies. I'm going to list them in alphabetical order. And you'll see some real familiar names here. Apple, Adobe, Amazon, of course. Baidu, the Chinese companies, Google, which, is now known as Alphabet. You've got IBM, which will be an interesting dividend play, Meta, Microsoft, NVIDIA, Oracle. So you've got some of the real common names, but you also got Palantir, you got Pros Holdings, Sentinelone, or Sentinel-1, I guess it would be pronounced. You got SAP, a German company here, Supermicro Computer, which serves a lot of these AI companies, including NVIDIA and Tesla. You got Snowflake, a smaller, newer company, Symbotic, and of course Tesla and Taiwan Semiconductor. So I'm going to go through them in alphabetical order just for ease, and it makes it easier to go through this many companies. But we're going to start with Apple. I'm going to start with adjusted operating earnings, and I'm only going to look at the last 15 years, okay, because this includes Apple's growth rate slowing down from very high rates of growth back in 2011 and 12 into more realistic current growth rates. Okay, so looking at Apple from a standpoint of operating cash flow, the company looked like it was a really good buy in December of last year, and now it's gotten a little expensive again. But let's start all these companies with adjusted operating earnings. As you can see, Apple traded around 18 or 19 times earnings consistently during this time. The actual normal PE was 17.38, but coming out of COVID, it's gotten a little bit pricey again. Now, I want to point out this is a $3 trillion company. If I look at forecasts are for the company to grow earnings at only 5.96% going forward. That makes Apple look pretty expensive to me based on earnings. If I look at Adobe was a pretty interesting buy maybe in September of last year. It was close to what I would classify as fair value. But again, it has run up with the hype and hysteria that we see associated with AI now. So it's expected to continue to grow earnings at 13%. But again, it looks pretty expensive to me currently. The next company we're going to look at is C3 AI Inc. This is a brand new company. It does have expectations of some future growth. This is the forecast. The long-term growth isn't given on this stock. But if I look at this stock from the historical perspective, it's never made any money. It came out like a lot of IPOs do at a pretty high valuation and then collapsed. Maybe this would have been a good time to buy it, but I would call this a speculation, at least based on earnings. The next one we're going to look at is Amazon. And if you look at Amazon based on earnings, it doesn't look so hot. The forecasting is interesting in that they do expect earnings to begin growing rather fast at around 30% a year. So, I don't have really good pictures on Amazon with earnings, but we'll see what they look like when we look at cash flows. Arista Networks Inc. is one of the more interesting ones to me that I came across because this is a pure growth stock. It's been growing earnings at 30% a year, and that orange line on here is a PE of 30, and you can see that the stock price has tracked that, and it's trading right now at 30.42, which would indicate, fair value. If I look at forecasting, it's forecast to grow at about 16.19% for the next couple of years, but the long-term growth rate here is expected to be 18%. And this is a case where you can't overpay for a fast-growing stock and not make money. But, you wouldn't be making the money that the company is capable of earning if this earnings growth rate turns out to be correct. The next company we're going to look at is ASML Holdings. It's got long-term growth expectations of 24%. It's pricey, but if it does grow like this, you could make some money. The current valuation, is interesting as well. It looks like you could make money buying it, but you're not fully participating in this growth because theoretically, it could have a PE contraction, but the market has normally sold it at 38 times earnings. From that aspect, it looks good. Historically, the company has grown earnings at about 16%, but I do want you to notice that growth rate has been accelerating in the last few years. So if I shorten this time frame, I've got now growth going at 24% over the last 5 years, not including these estimate years, is why I'm saying 5, and then, 25%. So, this is a relatively fast-growing company, $275 million market cap. The next stock we're going to look at is Aerovironment. It hasn't had a lot of historical growth. This is earnings now we're still looking at. Going forward, it's expected to grow earnings at about 20%, and there is no long-term growth rate for this company. So, bottom line is this company looks expensive based on its future growth of earnings. Alteryx, company symbol AYX, it's a B- company, $3 billion, a small cap. Long-term growth rate here, again, we don't get one because this is a relatively new company. Historically, the company has not made much money, but more recently, earnings have begun to really advance and are expected to advance. So, this is one that's been dropping. It might be one you might want to watch for a while. The next company is Baidu, the Chinese company. Interactive Media and Services. Stock looks fairly valued based on earnings here. Historically, based on future growth of earnings, it looks attractive. And based on long-term growth of earnings, it looks extremely attractive. So this might be one of those AI stocks that you could take a real hard look at and invest in today. Next one, Duolingo, very, very expensive looking to me. It's a small, $5 billion market cap, but it's a young company that's not expected to have much in the way of earnings, going forward. The next one is Alphabet. Alphabet, based on earnings, looks a little pricey, but based on how the market normally prices this, it looks attractive right now. I'll look at this one with cash flows later. IBM is one of the more interesting ones. IBM is a company that's turning around. If we look at just the last few years of this stock, it's beginning to grow again. It shows some signs of some life here, and you can buy it at a pretty attractive valuation. The real key here is you get a 5% dividend yield, and you can make some good money in IBM as one of the more conservative A-, rated companies in this whole group here. The next one is Irhythm Technologies. Very little in the terms of historical earnings. Looks very expensive. I'm not going to spend a lot of time on it. Meta looks a little expensive based on earnings growth. If I maximize this out, it looks like it's inexpensive. But if I run this for just the last few years, growth rate has slowed down dramatically, and forecasting growth on this stock is expected to be about 23%. So this is a case where it's fully valued. It's in the valuation corridor here based on earnings, where you could make some money if it does sell at a premium PE, and its normal PE has been about what the growth rate expectation is. So this stock, could be a time that, might not be too late, in other words, to go ahead and get into Facebook or Meta. Microsoft is, probably the most famous based on the way the market normally has been valuing it recently. It doesn't look too bad. However, if you look at it from a pure growth point of view, it looks very, very expensive. Historically, the company's earnings, growth has been very strong at about 18% a year for a $2.5 trillion company, but it's not cheap. I don't know if Microsoft is such a great investment today based on that. NVIDIA is probably the most, publicly talked about AI stock, and it works with a lot of these other companies, including Tesla and Oracle and several others. But I believe that, horse has left the barn here. It's too expensive at this level. Oracle, same. Oracle has got very good growth. This company the price has tracked its earnings growth very nicely. You can see what happens when it gets overvalued, and it's got overvalued now. But looking at it going forward, it just looks pricey. It does look like it has some good growth potential going forward, and you probably could make money if you bought and held it and maybe even added to it, if you got the opportunity. The next stock here is Palantir. Palantir has got real high growth expectations going for long-term growth. The estimates for current growth rates are also very high. Historically, this stock, has not grown very much, but notice that the growth was just expected to be very strong for 2023, which I believe explains its high valuation. Again, I'm going to kind of speed up here. This is Pros Holdings. It's an application software company. It looks kind of expensive. Sentinelone is a stock that came out at a very high IPO. This is very common in IPO patterns. It now looks relatively, better from a standpoint of maybe buying it for the long-term future. We're going to look at all these. SAP actually has had good earnings growth. It's now gotten a little bit expensive. Looking at forecasting, it doesn't really look that bad because it is forecast to grow at over 20% a year, and the long-term forecast growth is good. So you'd be paying a premium value for it here, but you could buy this stock and theoretically still make, some really good money investing in it. And this is the German company I mentioned earlier. This Supermicro computer looks very, very good on earnings. Historically, the earnings have really screamed over the last couple of years, I want you to notice, but this company has some really weird cash flow looks, and I'll get to that. And then here's Snow. Got to take the normal PE off here to give you a picture. It's come down in value. It's beginning to grow. Forecasting growth for Snow is expected to be very high, but you're paying a 435 times current earnings. Long-term growth is expected to be very, very high at 69%. This company might be a good investment if you can ever get it cheap enough, and I'm not sure if that's really the case yet. The next one we have is Symbotic. Symbotic is very, very expensive looking to me. And then, of course, Tesla. Tesla might have been a really interesting buy, in the beginning of this year. In December, January of this year, it had a pretty good, strong correction after getting overvalued, but we'll look at it from a standpoint of cash flow as well. Taiwan Semiconductor actually looks pretty interesting here. It's got some decent growth potential. It's fully valued, but it's not crazy valued from a standpoint of some of these other AI stocks. So Taiwan Semiconductor, which of course is out of Taiwan, might be interesting. Now, if I switch this to sales, I'm going to do sales next. From a standpoint of price to sales, Taiwan trades at about 5.97. It looks interesting at that level. Tesla looks interesting at sales, but that's at 10 times sales. That's what this orange line is. It represents 10 times sales, which has been a very normal price to sales for Tesla. So it looks kind of interesting here. Symbotic looks very, very expensive. It normally trades around 1 time sales. It's currently trading at 2.6 times sales. Snowflake, but the problem with this one is the normal price to sales has been extremely high. I'm not sure, trading now at 4 times sales might make it attractive, but I don't think this picture is really a realistic picture of what the future valuation. Supermicro Computers, I mentioned, is trading at a very, very high price to sales relative to its normal about 0.58 times sales. That's what this orange line is on this case. So you always see what the orange line value or multiple is by looking at this orange box here. Going on, looking at the German company SAP, trading pretty much, close to its normal price to sales of 4.28, a little bit above that at 4.65, but it might be reasonably attractive here. If we look at Sentinelone, it's been trading at 34 times sales, but it's been growing sales at 69%. Currently, more realistically, the last year or so, it's been trading, at maybe 9 or 10 times sales. It's currently trading at 12 times sales. Looks kind of interesting there. Pros Holdings has been a 5-time sales company, which is where it's currently trading at, so it looks fairly valued here. Palantir has been normally trading at 22 times sales. These kind of times sales numbers are very, very high. Notice that, we're down to single-digit prices to sales in the last couple of years. You need to analyze that as you're looking at it, especially those of you who are FastGraph subscribers. Oracle normally trades at around 5 times sales. It's currently trading at 6 times sales. It's a little bit expensive. NVIDIA is normally an 8 times sales company. Actually, for many years, it was a 2 times sales company. It's now currently trading at 31 times sales. And I just believe the horse has left the barn here on the NVIDIA. I love the company, but I think it's massively expensive. Same with Microsoft. Both of these are great companies. I just question whether they're great investments if you were buying them today. If you bought them many years ago, I might say keep holding them. Meta looks like, price to sales normally of around 11, trading at about half that now. It might look interesting if you're looking at it from a sales point of view. Irhythm Technologies trading below its normal price to sales. IBM is trading, just about 2 times sales, which is pretty normal for it. And again, this is a turnaround situation with a high dividend yield and a good long-term dividend record. So it might be AI for the conservative. Google, or Alphabet, as it's now called, trading at around 5 times sales. Its normal price to sales has been about 6, as you can see. So this might be relatively inexpensive on a normal price to sales. Duolingo trades normally at around 12 times sales. It's currently about 12.4 times sales. So it looks reasonably priced based on sales. Baidu looks extremely inexpensive. Blended price to sales is 2.2. It normally has traded higher, but keep in mind for the last several years, this company has traded at a much lower price to sales level. But the point is, the stock is inexpensive by almost any metric you measure it at. Alteryx is normally a 12 times sales company. Currently, you can buy it at 3 times sales. That might be, relatively inexpensive. Aerovironment is looking pretty expensive at 4 times sales when it normally trades at 3 times sales. And then ASML normally trades at around 6 times sales, currently trading at almost 11 times sales, so it looks a little bit expensive. ANET is actually the interesting one here. Arista, the symbol ANET. It trades, just a little bit above its normal price to sales, but it looks pretty attractive even on a price to sales. Amazon is trading below its normal price to sales of 2.6 at around 2.44. So looking at Amazon from a sales perspective, it looks like it might be interesting. It would have been a lot better buy, of course, a couple of months ago. And then C3 AI Inc. is trading at around 15 times sales. It's been normally trading at around 17 times sales, but keep in mind the last couple of years, it's been trading at 8 or 9 times sales, even as low as 4 or 5 times sales. So, that's what you're analyzing when you look at it. Adobe is trading a little bit above its normal, 9.7 times sales. Then, of course, Apple is trading at almost 8 times sales, and it's normally a 4 times sales company. All right, so now we've looked at sales. Now, finally, and this is the one I want to focus on the most, I'm going to go through these very quickly, looking at operating cash flow. And I think this is especially true of those that pay dividends. But Apple looks a little expensive based on operating cash flow. And again, forecasting is not expected to grow cash flow, very, very fast going forward. Apple is, after all, a $3 trillion company. And I think you have to ask yourself, how much growth can a company this big really generate? So the point is, Apple would have been great to have bought it 5, 6, 7, 8 years ago, but is it such a great investment today? If you owned it, maybe I would still hold it. Long-term growth rate expected to be 10 or 11%. You probably wouldn't lose a lot of money here. And if you got a lot of money made, if you're trying to avoid capital gains if it's in a taxable account, it makes sense to continue to hold Apple perhaps. But I'm not sure it's a great entry point at this point. Adobe looks a little expensive based on the expectations of 13% growth. And again, historically, it's been growing around 16%. It looks expensive on a cash flow basis. C3 AI doesn't really have any cash flow. It's expected to earn a little bit of cash flow next year. This is just a case of a young company, which maybe you'd want to buy this one based on sales, which we already looked at. But, it's one of the hotter ones out there, and we really don't have any idea what the growth is going to be. Now, analysts are starting to project some really high growth going forward, but, it's too early to say. This one requires some due diligence on your part to really figure out what's going to happen to it. Amazon looks, operating cash flow is expected to grow very fast. From an operating cash flow point of view, it looks inexpensive based on its normal operating cash flow growth. And analysts are actually expecting that cash flow growth to accelerate here. So Amazon looks very, very attractive at these levels. Arista Networks is expected to grow operating cash flow at about 22%. So, it looks decent here, but it's not cheap. That's basically the point I want to make. The next one is ASML Holdings, operating cash flow. It's pretty much in line. Long-term growth, may be the answer here because it's a 25% expectation. The next couple of years could be, a little tricky because of the high price you'd pay, but if you held it long-term, it might turn out to be a good investment for you based on cash flow. Aerovironment is expected to grow cash flow at a very high rate. Historically, the company's cash flow growth has been very low and very erratic, so I would take that into consideration. Looking at Alteryx, it's been very similar. It has no, lost money or generated negative cash flow in 2022. From a forecasting point of view, it is expected to start growing cash flow. Perhaps that's what the AI is all about, and we don't get a long-term number for it. The next stock I want to look at is Baidu. It looks like it's, very, very inexpensive based on its future cash flow growth, and historically it looks very, very inexpensive based on, a normal price to operating cash flow of around 21 times. Duolingo looks expensive based on operating cash flow. That's a young company. Google or Alphabet might be a really interesting way to play in a very high-quality company. It's based on operating cash flow. It looks very, very inexpensive here. IBM, if I'm looking at it from a standpoint of forecasting, IBM looks very, very inexpensive. Long-term growth rate is only supposed to be 4 or 5%, but the value here is buying it so cheaply. It gives you the opportunity to generate a double-digit rate of return with a high dividend yield for those of you who are looking for income. And, it's an A- rated company that's AAA rated. Irhythm Technologies is expected to start generating cash flow, but hasn't generated it yet. But there is some expectation of growth. This is a kind of a more speculative situation. Facebook is expected to grow cash flow at about 13% a year. Long-term growth, about 13% a year. Historically, it's been growing cash flow about 31% a year, but keep in mind the last 7 years that drops down to the 17% number. So, Meta looks like it's reasonably inexpensive here, even though its growth rate is slowing down. Microsoft just looks expensive, even based on cash flows. Great company, AAA rated. It's just, if you're buying it at these levels, or, how much are you going to participate in this 15% growth that's expected? In long term, it's expected to grow at 12%. But as an investor, how much are you going to be able to participate in that growth by paying such a high price for it? NVIDIA is the very same situation. It's just, to me, it's too late to be buying NVIDIA. It would have been a great buy, prior to the COVID years if you'd have had that kind of foresight. But that would have been before AI became hot. And a similar situation exists with Oracle. Oracle has been a really good investment and a really attractive value investment for many years. It's a little pricey now. Looking at it longer term, it might not really be that bad. Long-term growth rate is expected to be about 13%. So, it might not be too late to buy Oracle, but it's too late to buy it cheap. Let's put it that way. Palantir looks like it could be very, very interesting as a long-term investment. This is a, company whose history is relatively short. It came out, the IPO got real hot, then it sank for several years. And, we don't really see a growth rate here on the historical chart, but it looks kind of interesting. Pros Holdings, I think, is a little expensive, no matter how you look at it, but it is an AI play. Sentinelone, maybe now that it's gotten so, the price has fallen so much, it may start to look like an interesting stock if and only if you were willing to hold it for years to come. And I think that's a key point that I haven't maybe stressed enough here. Any of these companies here, if you're buying them today, you need to buy them expecting to hold them for the long run. SAP, which is an A+ rated 141 euro market cap company, looks interesting. Long-term growth looks very, very interesting. It's expensive. I call this fully valued. Notice these orange lines here. This is still just outside the value corridor that I like to say. So it's fully valued, but not overvalued, in my opinion. And then Super Microcomputer, I want to really look and see why is this company having such a cash flow, such erratic cash flows, and why are cash flows expected to drop. But this is an interesting company that you might want to research. Snow looks like it's got, some good cash flow potential going forward. The market expects strong growth, but are you overpaying for that growth? Now, the long-term growth for Snowflake's cash flow is expected to be almost 70%. So this could be something that might be very, very interesting to learn more about. Symbotic is another one that's got interesting operating cash flow. Forecasting cash flows are relatively strong for the price you can buy it at today. Long-term growth we don't really get, but this one doesn't look too bad. Going on, Tesla just looks overvalued based on cash flow, both historically and futuristically. Going to forecasting again, if I'm looking at the long-term growth rate, cash flow about 14%. This is again, it's an $876 billion company. The problem is it's just a little bit expensive. This is a great company, clearly, and I'm a big fan, but it's expensive, and I've done quite a few videos on Tesla. Taiwan Semiconductor looks actually very attractive here on almost any way that you would look at it. You know, it doesn't have a lot of growth, but the stock is very, very, very inexpensive right now. And again, this is a AA rated, Taiwan company, but it does look very, very inexpensive here. Anyway, this has been Chuck Carnevale looking at 26 of the most popular AI stocks. The point here, unable to get into this very deeply, obviously. It's been a long video as it is, covering 26 companies, and I was barely able to give more than a minute to each one. But, there are some interesting opportunities here, but every one of these require your own comprehensive research and due diligence. I'm not recommending any of them. I did talk about some that I liked a little better than others, so you could take that into consideration. But if you like this video, give me a like, ring the bell, subscribe to the channel, and also, subscribe to Fast Graphs, because what a great way to look at stocks and be able to understand what type of investment you're making. You can just determine how good the company is, but you can also determine how good the value is. And that the winning combination is buying a great company at a great value. Thanks for watching. Talk to you again real soon.